Hey, what's going on, guys? Welcome back to Q Learning, and this is a stock analysis on Tesla. Ticker TSLA. Current market value price is $1,014, and they are currently trading on Nasdaq. Right now, Tesla is down nearly 20% since all-time highs back in the beginning of November. And in today's video, I'm going to be going over why Tesla is down so much and what their actual fair value should be. Going over the first thing, an article came up from Jefferies, essentially just a big trading company that looks at stocks and analyzes it. And an analyst said that he could see Tesla rising by 30% in 12 months. But here's why. Right now, Tesla is basically trading on the fact that they have a lot of really good projections for the future and what they've done so far. Even though Tesla has not necessarily done that much so far, they have had a really good analyst saying that their price target on Wall Street should be $1,400. And even though over the last 2 years, Tesla's up nearly $1,500, investors are basically saying that they think Tesla will be able to keep up with this. And even though they have a lot of debt, and fundamentally, Tesla really is just not there. They have high P to E ratios. They're trading for super high multiples. And the really only thing that's keeping them at these high valuations is their free cash flow. And basically, what this analyst is saying is that right now, Tesla has a really large operating margin, and it's of 14.6%. And this is actually 10 percentage points up from just only 2 years later. And so Tesla becoming more profitable and also being twice as profitable as companies like Volkswagen. Tesla's sales model essentially is what makes them such a valuable company. The only thing is to keep up with Jeffrey's analyst right here, to even make sure that this $1,400 price target might even happen in the next 12 months. Tesla right now is projected to ramp production to 20 million cars by 2030. And right now, they only have an estimated of 890,000. And that is just absolutely insane. And so even though they have a huge share of the global market and they've been expanding to other countries, this is a really, really aggressive statement. 20 million cars by 2030. Again, is it possible? Yes. But as in value investors, we need to take into account that just because things are possible does not necessarily mean they'll come true. And so going into why people are saying that Tesla will hit these certain numbers is that, they have more cars coming out. We got the Roadster 2, the Cybertruck, and a lot of other semis. But at the same time, we've seen a lot of delays from Tesla. They've all been being pushed back, and they're really, really far in arriving anytime soon. And so while there's a lot more bearish investors and analysts like JP Morgan having a price target of $250, I do think Tesla's fair market price is currently around $650 to $700, but I'm going to get into their intrinsic value or their fair value and tell you guys why. So the thing is, when markets start to go into a downturn and markets have kind of just been going sideways for a little bit, what's really important during this time is their free cash flow, which basically just means the amount of cash that a company may have on hand to use to support their company in research and giving back to stockholders through dividends and other things like that. And so I do think with Omicron and overall COVID rising right now, the market is going to stay a little bit sideways. And basically, my estimates for Tesla is off of their free cash flow. And so using this website called Finbox, they do a really good job in, inputting projections and using working capital and showing the actual value of what some companies should be intrinsically, or I mean fair value wise. And so we can see here that on the high end, Tesla should be valued at roughly $909, but on the low end, you have the 650, both of which are lower than Tesla's stock price as of right now, which is really important because to try to compete with their growth and their EBITDA, to even keep that the same over the next 10, 15 years, it's going to be really hard for Tesla. And so in my opinion, this is what puts Tesla at a terminal value or fair value rate of at $650. And I do think that if we keep this like very conservative value, we can wait for Tesla to come down and get started position in them. Now, just a little bit on the trading side, Tesla's going to hit this high resistance here at 970, and maybe it will bounce off if the market starts doing well in the next week. But something to keep aware of this is that there's something called stochastics, and right now Tesla's in a downtrend, and it seems like they've been kind of going down for a little bit while now. So I do think Tesla probably will sell off to this $850 level. And if you guys are short-term traders, maybe you can pick Tesla up then and just making on the fact they'll hit that support. But other than that, guys, I really wouldn't start in position in Tesla right now. But if you guys have any questions or comments, leave them down below. And make sure to subscribe, guys. Make sure you tell someone that you love them, and have a great rest of your day. Peace.